Most people think of Roth IRAs only for tax-free growth and for tax-free withdrawals, but they're unaware of so many other benefits to having a Roth IRA as well. Today, we're going to go over one of those not so talked about benefits, how it's awareness and education to potentially save you thousands of dollars and to protect you in other various ways here as well. Now, what I'm referring to today is regarding the healthcare, regarding Medicare, and regarding to what's called IRMAA on here as well. Now, IRMAA, the IRMAA, is the income related monthly adjusted amount that affects the income levels based on your taxable situation that has that 401k, the IRA, that pension, that non-qualified brokerage account, short-term, long-term capital gains, and other taxable items as well. But we'll also see how that Roth IRA, or maybe even an HSA, or maybe even your own cost basis could be an advantage to you to have lower IRMAA costs, to have lower medical or Medicare type cost on here as well. Now, we will be using several visuals, several charts, and several examples throughout this entire video on here as well, so that you can visually see what is happening, so that you can have greater awareness, so that you too can find ways to retire earlier, wealthier, and happier with that education and peace of mind. Now, my name is David Lundberg. I have been in the investment industry since 2015, helping guide people retiring earlier, wealthier, and happier. I do have 2 master's degrees. I have a certificate in financial planning. I'm a Marine veteran, and also I'm certified in pranayama and meditation for holistic wellness. Now, as always, this is educational only, not financial, tax, legal, or medical advice. Always consult a qualified professional about your own situation. Now let's take a look here at some visuals and charts so you can have that greater awareness towards your retirement on here. Now first, coming up here on the screen, we're going to look at what is Medicare, what is overall. So it's going to read this over here to you on there and what the Medicare is. Medicare is a federal health insurance program for people age 65 or older. People younger than age 65 with certain disabilities, permanent kidney failure, or other items known as Lou Gehrig's disease may also be eligible for Medicare. The program helps with the cost of healthcare, but it doesn't cover all medical expenses or the cost of most long-term care. If you have choices of how you get your Medicare coverage, if you choose to have original Medicare, Part A and B coverage, you can buy Medicare supplement insurance, Medigap policy from a private insurance company. So overall, that is what Medicare is. Now let's take a look here on what IRMAA is, how that is exactly defined as well, with the next image coming up here on the screen. Now, IRMAA, I-R-M-A-A, stands for Income Related Monthly Adjustment Amount. It's an additional surcharge that some Medicare beneficiaries pay in addition to their standard monthly premiums for Medicare Part B and Medicare Part D prescription drug coverage. The surcharge kicks in when your income exceeds a certain threshold, which we will see later. Essentially, those who pay IRMAA are paying a greater share of their actual Medicare Part B and D premiums. As it stands, the government pays a substantial portion, about 75%, of the Part B premium for most beneficiaries who pay on average the remaining 25% on there. So as we can see on there, the Medicare is a huge reason so many people wait to retire earlier until 65 for that. Now there are other options we talked about prior, but we want to be aware of all these expenses. We want to be aware of all the costs. We want to be aware of ways to save money and to protect our money here as well with using things like a Roth IRA potentially too on here. Because keep in mind that 401k and that IRA and that pension or that TSP or other taxable items, those are counted as taxable income, and they do go against you in seeing if you have increased IRMAA cost, kind of similar to Social Security benefits taxation as well, which I discussed in prior videos, and how having that Roth IRA with that qualified tax-free withdrawal money can save you various costs to keeping more of your money as well. Now, we're going to be looking at here next is on here is the 2026 Part B incomes, taxes, and charts. So this is for Part B first. Now keep in mind, Medicare does a 2-year look back period. That's right, 2-year look back period. So in 2026, they look at 2024 for your income. As you can see in this chart, we have an individual tax, joint tax, married tax on there. On the far hand right, it'll say you pay each month in 2026, and it has the dollar amounts on there. Now, if we did say, for example, a joint tax return, and we had someone that had less than $218,000 in total income that was reported in 2024, they would pay $202.90 every month. However, as we move down that chart, if we go to between $274,000 up to $342,000 for the joint return, they now go to $405.80 every month, down to the highest one down there for that jointly. If you have more than $750,000, you then pay $689.90 every month on there. Now that is just for Part B. Next, we're going to look at the next chart on Part D as well, and that same 2-year look-back period also applies with Part D coming on the screen here. Now, in 2026, if your yearly income in 2024, that 2-year look-back period, you can see similar layout: individual, joint, married filing separately, far right-hand side, how much you pay each month on there. Similar to the last one, if you're joint, less than $218,000, your plan premium cost. However, as you go down the chart, between $274,000 to $342,000, you go to $37.50 extra each month. To the highest amount, more than $750,000, you go to an extra $91 plus your plan premium there for the month as well. And that is the Part D chart on there, which is what matters. Now, people always say, well, that only matters to high earners. Well, no, so many people have a high 401k or a TSP or an IRA, or they have a high pension, or they have higher tax-deferred accounts, maybe a SEP IRA or something that's out there, and they need to be aware that other than just federal taxes and city and state taxes potentially, other than reducing potentially your Social Security benefits, it can also increase the cost of that Medicare with IRMAA, as we saw on here on Parts B and D, which is why we're going to look into how that Roth account can help you with that Roth qualified tax-free money to help lower those costs or protect those costs as well on there. Now, let's take a look at the next chart right here is what counts as income exactly. So in this next chart we have on the screen, we're going to go over several items on here on what can count, what may count, and what doesn't count overall. So I'm going to go over a review with some of these on here to look at them too. So as we can see here on this chart, there are several things on there that can count for it. That could be that 401k, that could be that IRA, that could be that TSP account, that could be a pension if you do have a pension on there. That could be any Roth IRA conversions, because keep in mind, when you do a Roth IRA conversion, it is taxable income in the current year you do it in, which is why we want to be careful on when we are doing those Roth type conversions on there. Now, we also want to look at on there is to say your Social Security benefits. A part of that does count as income on there, wages and tips on there, distributions on there. And then we also want to keep in mind that tax exempt interest and income added back in that determines your modified adjusted gross income in IRMAA. And tax-exempt interest has been earned or accrued, for instance, municipal bonds or muni bonds, which can be significant for a lot of retirees. Interest from U.S. saving bonds used for qualified education expenses, income earned abroad that was excluded from gross income. These are all things added back in there to determine your IRMAA cost overall that you may or may not have to pay regarding that 2-year look-back period is what we want to keep in mind on there. Now, you might say, well, how can I better prepare if I'm in my 40s or my 50s on there? Well, so many people always want to talk about Roth IRA conversions compared to the IRA only in a tax sense. But if we also look at doing a Roth IRA conversion earlier, then you have more years to have that break even on that taxes you paid. So not only could it be a future tax protection and savings on the federal, city, and state on there, it can also potentially save you on Social Security benefits tax. It can also save you on the Medicare IRMAA or health and dental cost on here as well. That way you already have it covered in your 40s and 50s. That way when you do choose to retire, you already have some additional protections and awareness involved in the plan. Now you might say, well, what happens if I'm already in my 60s? What can I do? What happens if I'm already on Medicare? What can I do? Well, if you are going to be doing a Roth IRA conversion, other than just the taxes you have to pay, you want to be aware, hey, if I do a Roth conversion, yes, I pay taxes. But now how much extra in IRMAA am I going to have to pay in the future on this because of this income in this year I'm doing it? Also want to keep in mind is, hey, how are my Social Security benefits going to be taxed by doing a Roth IRA conversion if I'm already on Medicare and I'm already taking Social Security benefits on there? So there are other impacts to be aware of, and you just want to ask yourself, what is my break even in the future? What does this look like for me? Maybe I'm married. How does it affect our marriage? What happens if I pass away as a spouse and I have my surviving spouse? How does that impact them as well? These are all things we want to look at and be prepared in advance. And that's why here at us, we have coming up on the next screen here, our 7 stages to wealth and life alignment here at our own firm, where we go over the clarity, where we go over the steps on here, that we always start off with protecting, then our flow, then our power, our love, our voice, our vision, and align. So we're looking at ways we can maybe use that health savings account, the HSA. Maybe look at ways we can use that cost basis, ways we can use that Roth IRA money, but that way we have that vision, we have that clarity, and we have that peace of mind, so we're not guessing or seeing what may not occur, and that way we're fully aware of it on here. Now, doing nothing at all and just blindly guessing, it's never the best thing for you. You always want to see exactly how it can impact you, because coming up this next screen now you can see on here, in financial and tax planning softwares that we utilize here, IRMAA is part of the screen you can see on here. Now it's kind of tiny, but I do have in that green box, it does say Medicare IRMAA. And you can see at the top in the red, it has taxes, expense details, and income. So when we make plans with people, IRMAA is just one of probably 20 different taxes that is included in here, so that we can run your assets. We can run all your allocations. We can see what are your projected IRMAA costs. We could then see strategies like using a Roth IRA conversion, the taxes you would pay, the break-even point, and how that may or may not save you on IRMAA costs in the future as well. That way we're not just guessing. It's math, it's science, it's charts and data on here to help do what's best for you in your own situation. Now, you might also go, well, what else can a Roth IRA be good for? Well, in prior videos, I also discussed that having a Roth IRA or doing that conversion on there, if you're married, for example, or you have heir or heirs, you leave an inherited Roth IRA instead, and that inherited Roth IRA can grow tax-free for up to 10 years, and there are no RMDs on there because the rule is you have to take the money out by the very end of that 10th year on there. So that money can also continue growing tax-free, taken out tax-free, and maybe that surviving spouse now, they don't have to worry about extra IRMAA cost, extra tax cost on there as well. That way they can have that for their overall protection. So the biggest thing overall is here, when it comes to IRMAA, Medicare, and healthcare, be aware of all the costs, be aware of all the expenses. If you're doing a Roth IRA conversion, don't just be aware of the taxes, be aware of other impacts on Social Security and Medicare IRMAA as well. We're never about guessing. We always want to give education, give you the math, give you the data, that you see the science in your own plan, so ultimately you can do what's best for you. If you like this video, I'd love to have you do a like on here, do a subscribe, or leave a comment below. Thank you so much and have an amazing day.